Okay, here we have Metminco again, MNC. I've taken all the pitchforks off here and all the other lines are drawn off here, because now we're just going to have a look at volume and what price has done on volume, and typically known as volume spread analysis. And it's basically a look at what price has done on volume. So I'm going to start by going to our most significant volume bar on the whole chart, which is this one here, and that's the highest volume ever on this chart, and pretty significant, pretty much dwarfs everything else. So that's a big vote then for price, and I'll just mark off the close of this big candle bar, this high volume bar, the close and the low. And so that volume there is pretty much a big vote for price to be in this range, and we can see that that price range has been influencing what's happened since, and we've had price go below there and come back up, price go above and come back down. Below we had the Japan crisis, and that lasted for us 2 days, and then it's back in this high volume candle, and that's still dictating what's going on even today. So what was the cause of this volume? Well, we all know, if you've owned the stock for a while, that this was the diggers and drillers recommendation. They said, oh, the price is going to the moon, they've got the biggest resource potential, could be the biggest copper play on the ASX, etc., etc. And all the diggers and drillers subscribers jumped in. Probably would have got a lot of breakout traders jump in, and the question we ask is, well, if price has gone up on high volume, why then did it go back down? So when we like price going up in volume, but when we see ultra high volume, we don't like ultra high volume, because that tells us that the professional end of the market are involved in. That suggests the professional end of the market are also involved in that volume. And are they buying or are they selling? Well, if they're buying, the price would have kept going up. So they're not bullish. Metminco at 40 cents. So while we were buying, the professional end of the market was selling into our demand, and they sold in a big way, and then price rolled over after that. So smart money, we'll call the professional end of town smart money. That doesn't include your super funds, who aren't very smart at all, don't make you a lot of money. But I'm talking about professional trading syndicates, private trading syndicates, market makers, etc., who make up a lot of the volume on the ASX. So smart money, they sell on up bars. This is an up bar. They sell into demand, and they buy into fear. They buy on down bars, and basically, if you've got a lot of money, that's pretty much the only way you can make money from the stock market, because everything you do influences the price. So, and in actual fact, we'll see that smart money were actually selling before this buy recommendation as well. But if we get time, we'll go back and have a look at that. But in the meantime, I'll get rid of this high volume bar because it distorts all my other volume bars. And so we marked off there the 40 cents, and the low of that bar, the 35.5 cents, is a significant price range. We could also mark the high of the bar, at 40.5, but I'll stick with the 40 because it seems to be the one that it's a nice round number and seems to be the one that price is gravitating around. So we'll get rid of that high bar. What else have we got here? And so I'll just mark off some of these high volume bars to just set some key levels. We've got another high volume bar straight after that was lower, so I might mark that off as well. And that's 37 cents. And it's just interesting that price has started where that 37 cents has been picked up right at the moment. Actually, you'll see this really big volume bar here. That at the top of that bar, that's not a big volume bar. Actually, that's a big widespread bar. That was Japan. Let's see where the it's hitting up on that 37 cents there. So that's quite interesting. I might give that a different color, so at different levels of different colors. Okay, so if smart money, I'll get rid of that bar as well so it doesn't distort the price. If smart money buy on up bars and sell on, buy on down bars and sell on up bars. How do we know they're in there and buying? Well, they can't hide from us in the volume. When we see volume, ultra high volume, this sort of analysis assumes that there is professional money coming in, and what they're doing will be realized by what happens next, what happens over the next few bars. So here we have a big volume bar coming at the low, and we know smart money buy on down bars, so the professional market are in there, and we know they're buying. And what happens next? Price goes up next. If they were bearish the market, why didn't they sell before now, before this low? One, and two, how has price risen after that? That's because this high volume bar has hidden buying in it. They were starting to buy this bar. They were supporting the bottom of this bar, and then price has gone up. And we see when Japan happened and everything went to hell, everything was out of control. Well, we actually have this 30 cents actually controlling the price of all that panic. And when you compare the volume on that down, there's hidden a lot of buying in that down bar. There's a lot of selling, but there's also a lot of buying coming in up into that bar from that long shadow, and then price goes up. So we know the professional end of town were buying that bar back up as well. And so that 30 cents there is a significant bottom. What else can we see? We've got one there at 42.5. We've got a few there. There's one there at 42.5. Well, anyway, we've got smart money coming in at the bottom. Price has risen. There's been a bit of selling as it hits this line here from our high volume bar to the left, and that's because there's a lot of supply. There's a lot of locked in buyers in this bar who just want to get out. So price has gone up there, gone up to an area of high supply, and it's being sold into. Come back down, and then what happens, interestingly enough, as it comes back down, we make a higher low, and on very low volume. That means there's very little selling down in this area, and that's the way smart money like it. They're actually coming back down and testing for supply in a high volume area, which was this bar here, actually the top of this bar. So when you see that testing happening in a previous area of high volume, and it's actually on very low volume, and ideally the lowest in 3 bars, which that one is, then you know that perhaps that tells the smart money, well, there's very little selling. We can take the price up because if we're bought low, we don't want to have to be buying, selling from anyone who's trying to get out here. We just want price to go up. We want breakout traders to participate in this rise. we want to be doing as little of the buying ourselves as possible. So they're testing to make sure that there's no more selling in the market, and then they spend a fraction of the holdings, as little as possible, to mark it up quickly. And then we have volume spiking as soon as we get over this bar. Well, this bar is actually quite bullish because it's on volume, but it's pushing through and absorbing the 40 cent, all the supply from the 40 cent area. And it's back tested to make sure it's holding. We'll see really low volume straight after that, back testing the bar, and they've taken it up and they've sold into it on this high volume. So that will become an area of resistance later on. It's come back down, and they've just continued to sell it. As it's gone up, they've sold into it again, and then it's come back down. That demand, they've sold into demand. That demand was driven by expectation in the retail market of a announcement. So I think from memory, and that was sold into. It's come back down here again. There was a bit of buying in this bar, not a lot, but we know there was buying in it because volume picked up and then the price went up. It's gone up again, but it's gone up in very relatively low demand. And if we actually mark off the bottom of this high volume bar here, maybe this one here, see how it's come down and then gapped over that high volume bar. They've gapped it over that high supply bar to convince people to keep buying. There's a lot of selling there. It's come back down and it's been gapped over that high supply area, and that's a little trap to convince you not to sell, because now anyone buying there will now be holding losses and may want to just get out, but they've gapped it over that line, but they're really just wanting to sell more of their stock. And anyway, it's come down. And what we're looking for when price comes off like this is we're looking for areas of low supply, because that's where the smart money, that's what the smart money are looking for. They're looking for low supply where the selling exhausts. Like here, price comes down. We don't see much come into we don't see a lot of volume come into this bottom, but it goes up because the price just finally exhausts. The supply exhausts. People just aren't willing to sell it for any lower. And then it has a little bit of a run up, but it's up in an area of high supply again, this 40 cent mark, and you get a lot of people just selling out, and volume picks up there. And then we have Japan, of course, and then we have this interesting high volume transaction up here at the 41 cents. So that is now, which actually corresponds to the 37 cents, the bottom of this bar. So this is our Japan, and it picks up in volume, and then it gaps over this high supply line at 37, 35 and a half, 37 cents. It's sold into at 41. We know that because price then comes back down, but then it stops. And it stops on very low supply because there's very low supply. There's no selling pressure behind here. And we get a very low. So this gives us, this low volume tells us there's a very low supply down here, and price starts going up. And we have this bar here. It's the lowest volume it's been for a long time on a widespread bar closing on its high. And that is a test bar, and that is testing for supply, and it's a successful test because it's very low volume. Then we get what looks like a response with higher volume, but there's a lot of resistance. But then we get higher volume again, and this looks like effort to overcome this resistance, and it's a very low. It goes back, retests down below. It looks like another test. It's high volume, but it looks like effort. It's closed on its high, so this looks like effort to overcome this resistance. And then price is supported above the 50 cent mark of this bar. So if they decide to mark this up, which could be on the cards, they will probably try and gap it up to the 41 cents over this high volume area. And so Monday will be very interesting.